Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, good. Okay, we're going to start all over again. I'm so sorry about that, guys. So we had it muted by accident. So welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we are going to be talking about mortgage rates. Mortgage rates are getting better. I love to see that I've got people on so I can see my dad has shown up like usual. Why not? Love to see ya. This is a new one, Lop Daddy 2001. So you're here, you're new. I've never seen your name before. So it is great to see some new faces, new names, new screen names. You guys, this is interactive, so please feel free to put your questions into the feed. I will read them out and I will answer them for you. But as I was saying, mortgage interest rates are definitely improving, and we are starting to see all of the reports coming that are giving us that indicating factor that the economy is cooling. Today was a huge report that came out all about retail sales. So as I've mentioned in many of my episodes, the best thing that we can do as the consumer is to make sure that we are stopping our unnecessary spending. That is going to send the biggest ripple effect throughout the economy that cannot be ignored. At this point, we have now seen a worse than expected unemployment report. We are now seeing a worse than expected retail sales report. We are hoping that we are going to see that next inflation report come in looking better than it has the last two times. These are all indicating factors that we are moving in the right direction. The Fed is going to have to think very, very hard about what their next decision is. If they continue to push us further and further, they are going to very quickly drop us right into a very rough recession. Now, I'm not here to tell you guys that we're not already in a recession. In all honesty, my opinion as the mortgage mom, I think that we've been in a recession for quite some time. I think that inflation and the cost of items has absolutely kept things high, making our spending look like it's been more than what it truly has been. But I do want to read some of these. These are the headlines that you guys should be seeing across your Google pages today. So one is from CNN, and it says the backbone of America's economy was just dealt a serious blow. So great headline. I love it. Barron's, April retail sales disappoint. Consumers are pulling back. Thank goodness to all of you. Bravo, bravo. Retail sales flat in April, falling short of Wall Street's expectations. That's from Yahoo Finance. And, this is really important stuff. So I do want to read a really quick paragraph, and then we're going to jump into mortgage rates because they're obviously liking this news, and we are seeing some really great improvement. We're going to talk about the Fed. We're going to talk about recession and whether or not you should still be considering buying a home, because I know that that is also on everybody's minds. Yeah, great, Deb. Interest rates are starting to come down. We love to hear that. But, should we really still be considering purchasing a home? Don't house prices drop during recessions? So we're going to drop into that as well, and we're going to talk about it. So I do want to read this, though. This was CNN. This is just a very quick blur of what they posted today. Again, headline news. You guys can find it on Google. The backbone of America's economy was just dealt a serious blow. So this says U.S. consumers could be reaching their breaking point. I believe that we already have, but I like where they're going. After dealing with elevated inflation and the highest interest rates in decades, they're starting to rein in their spending. Last month, retail sales were unchanged from March, when spending increased by a downwardly revised 0.6%, the Commerce Department reported on Wednesday. April spending missed the 0.4% increase that economists had projected. According to FactSet, the figures are adjusted for seasonal swings, but not inflation. So again, this is all really great news because we need the economy to cool off. The Fed keeps saying it over and over again, that when they start to see the economy cooling is when they're going to start to, highly consider that they will start to do some rate cuts. Now, because of the unemployment report last week, and then because of today's retail sales report today, many economists, again, are already starting to price in a rate cut at the next Fed meeting, which we'll have in, I think it's 4 weeks from now. And I'll look up a date for you guys and tell you on next week's episode, but we're about 4 weeks off of the next Fed meeting. So many economists are starting to factor that rate cut in already. I would love to see it. I would love to be wrong. I kept saying that I didn't think we were going to see that first rate cut come until last quarter of this year, probably about September-ish. I would love to see it come sooner than that. Obviously, it's something that we all need. We all need a break. We all need our credit card interest to come down. That is directly connected to the Federal Reserve prime rate. We all need to be able to refinance those auto loans that we've possibly taken since 2021 when these rates started to climb. We all need to refinance our homes. Many of you are sitting on more credit card debt than you have ever sat on before. There are way more personal loans outstanding right now. Small businesses are having a very difficult time getting financing in order to keep their businesses open. We are seeing the signs of inflation cooling our economy, and that is what the Fed wants. So I hope that we see those cuts definitely come sooner than later, because if they wait too long, we absolutely could see us falling, not just into what some may say the recession we're already in, or some say we're not in it yet, but we could go into it. Regardless, if they hold these rates too high for too long, we are absolutely going to see a disaster take place. So we don't want that to happen. We want to see them cut sooner than later. And I have a feeling that they're going to cut a little bit sooner than fourth quarter, like I was expecting. I don't know if it's going to be at this next Fed meeting in 4 weeks from now, but I certainly believe that it is probably going to be that Fed meeting afterwards. So we're going to take a super quick break. I want you guys to put your questions into the feed if you have them. When we get back, we are going to talk about recession, housing prices, and whether or not you should be considering buying a home right now, because right now is a great time to get that application started to get ahead of the market. But we are going to talk about recession and if home prices come down, and does it make sense to try to start something right now today. So stay tuned. We'll be right back.
She's the mortgage mom.
This is Debbie Marcoux, the mortgage mom. Well, I've had a lot of questions lately. What can I do to bring my monthly payment down until interest rates get better? Well, if you are a buyer and you're out looking at homes, what you want to focus on is a program called a 2-1 buy down. If the market rate today is 7%, you would start your first year at 5%, year 2 at 6%, and year 3 through 30 would be at that 7%. It's a great way to enter the market today, knowing that rate cuts are just around the corner. Give us a call or head on over to our website at mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926.
When you're in need and don't know where to go, pick up the phone and call mom.
Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the mortgage mom, and we're talking about mortgage rates. They are getting better. Yes, Chief Manny. Chief Manny threw into the feed, yay, mortgage rates coming down. Did I hear that right? They are. So we have actually been on the downward spiral, which is what everybody wants to hear, for mortgage interest rates since the unemployment report was given to us last week, and they have just continued to get better every single day. Today was the retail sales report coming in worse than expected, which is what we love to hear. And that has absolutely just thrown a really, really nice wrench into our mortgage rate, into our rate sheet. So we are seeing interest rates improve, which is fabulous. We have probably gained about, to give you guys an example, we've improved by about 0.5% over the last 6 to 7 days, 0.5% in interest rate. That is a lot. So if you start thinking, if the mortgage rates were 7%, now we're talking 6.5%. Every single loan program is absolutely different. Every person gets a different interest rate. Your credit score determines your interest rate. The type of property determines your interest rate. The type of loan that you are getting, the program that you are using determines that interest rate. But we have seen about 0.5% improvement in interest rates over the last 7 days. And from this most recent report today, it doesn't look like that's going to change or stop anytime soon. So we talk about, should you be getting ahead of the market? If you are on with me right now, you are watching my show, you are getting information in real time. You are not in this industry like I am. You are not listening. You are not watching on a daily basis. You are not tuned in and zoned in to what is happening within the market. And that is okay. Most people are not. Most people have a normal job, not in the mortgage world, not in real estate. They are working a completely different industry. And so you are busy. You are getting up, you're getting kids ready, you're getting out the door, you're going to work. You are focused in on your field. And so you may not hear the information as rapidly as I'm getting it. So I have been saying for a long time that you need to try to get out ahead of the market. If you have been on hold, plans on hold, you want to sell your home, but you haven't done it because you know that the interest rate that you have is lower, your monthly payment is lower than if you were to go buy another home. You're hearing a lot of people talk, a lot of loan officers and mortgage companies say, we'll just buy now and refinance later. But you're like, yeah, right. I can't afford, that monthly payment right now. That doesn't make any sense. And first time buyers just keep feeling like, I am so priced out of the market. I can't buy what I want. I can't afford to buy what I want. Interest rates are just way too high. And here we are, and we're telling you, we have it refinance later. So I've been saying on this show, you need to get ahead of the market. You need to get out in front of the market. You need to know when it is time to pull the trigger to start that application. And I can tell you very confidently that right now is the time to do that. Just because you start an application and you get yourself pre-approved does not mean that you have to buy a home tomorrow. Those pre-approvals are good for as long as we continue to update your documents. Your pay stubs are good for 60 days. Your bank statements for 60 days, your credit report for 4 months, 120 days. So as long as we continue to update the documentation as it expires, your application will stay open and available and ready for you to execute on a plan immediately when you find the right property. Now, it is going to be very, very difficult with housing inventory low when interest rates do come down and the Fed does finally make that first rate cut and they announce it, is when we are going to see a ton of people come to market and get excited and get started. You want to be ahead of that. You do not want to be out trying to get an offer accepted with multiple offers on the table. I've talked about that. But one of the things I said before break was, an important factor to all of this is that you guys keep hearing me say, we need the economy to cool. We could possibly be in a recession. We probably are already in a recession, but this is what we need for rates to come down. So you could be very well thinking to yourself, should I be buying right now? Will home prices come down? Should I wait? So the one thing I do want to mention to you is that not every single recession, even if you are one of the people that believe that we are in a full-blown recession already today, if you are one of those people that believe that, not every single recession that we go through will drop prices on homes. I pulled an article from Bankrate that came out on March the 13th, and it said basically that the anticipation for home prices in 2024, and this was May 13th, so this is not something that came out in January or came out last year in December of 23. This was May 13th. This was 2 days ago, that they are still anticipating that home values will increase by 6.4% in 2024 and do not see a decline coming in 2025. So you guys can look that up on Bankrate if you want to find that article. So what the key takeaways though that were really important from that article for you to understand why was that low levels of inventory mean that sellers continue to have the upper hand in the housing market. So with very low levels of inventory in homes for sale, it is very difficult for home prices to come down. Now, sellers, you might be thinking, well, why are you telling me to sell my home right now today? Well, because if you are selling a home and you anticipate to go buy another home and you need the equity from the sale of your home to buy the next home, you are now going to be a contingent buyer. And I know I've talked about this on a couple of shows, but I'm going to reiterate this again. If you sell your home and you go into escrow and the buyer on your home falls out of escrow, which can happen. They can't get their loan. They do a physical inspection on your property. There's repairs that need to be done that you guys can't come to terms on, and the deal falls apart. That means that the house that you have in escrow that you're buying is going to also fall apart. So when a seller is looking at offers on homes, whose offer do I want to accept? They're going to accept an offer first in a multiple offer situation that is not contingent. They are going to look at somebody that does not need to sell a home in order to buy the next. Buyers, if you are a low down payment buyer, we've talked about this before. If you are an FHA, if you are a VA, if you are trying to utilize down payment assistance, you will also have a harder time getting an offer accepted when there are multiple offers on a home, because a seller is going to go towards those strongest offers, non-contingent, larger down payments, or possibly even cash. But the key thing here is inventory. We do not have enough inventory right now to satisfy the amount of people that need to buy a home. And there are not just first-time buyers that need to buy homes, but there are many people that in just their normal cycle of life have had that plan on hold. I've got a client right now who is in a 1-bedroom condominium, and they have since bought that home. Since that they bought that condo, they've had 2 children. So they are in a 1-bedroom condo with 2 kids, but they have chosen not to move because they didn't like where interest rates were. So they are now pre-approved, and they are now out looking for homes to try to move their family and sell their condominium. This has been happening for the last 2 years, truly since 2021. The normal cycle of life. Your family is growing. Your family is shrinking. Your kids are getting older. They're moving out. They're going to college. They finished college. They're getting married. You just don't need that big home anymore. Your plan was that you wanted to move. You want to go to Palm Springs. You want to go to Havasu. You want to go to Vegas. You want to move back, to the Tennessee or Georgia. Those plans have been put on hold because it didn't make sense. But all those people need to pull the trigger on that cycle of their life, along with all of our first-time buyers who have also been waiting. So if you wait for that first announcement to come, that the market, they have cut the rates, the Fed says it's time, we've cut the rates. We all know once they cut once, they're going to continue to cut. So now that advice that you've been hearing for the last 2 years from those other mortgage officers, those other loan officers saying, well, buy the house, refinance later. Now is a great time to be thinking about that strategy, because we know that we are on the downward cycle. We know we are on the downward trend. So now you can, with confidence, know that you could buy something right now and have an opportunity within the next 12 months to refinance the property and get into a better payment. Buyers, we've talked about this as well. There's always programs that you can utilize, like a 2-1 buy down, a 1-1 buy down, or a 3-1 buy down. We've talked about what buy downs are about. You guys have heard my commercials about it. You want to know more about it, just give me a call and we'll go through that. But if you are buying a home, not just first-time buyers, any buyer, if you are buying a home and you want to negotiate with the seller to get one of these programs paid for, you can lower that interest rate in today's market to get that rate down, to get that payment down while you are waiting for interest rates to improve, and then take advantage of a refinance. Many of you are high in credit card debt right now. You've got to get that debt paid off. So we've talked about home equity lines of credit. So if you are a seller and you've been wanting to buy, but you've seen your credit score take a hit because you're maxed out on those credit cards, but you didn't want to refinance your home, get a home equity line of credit, get a home equity loan. Get that debt paid off, get that credit score up. You will see that credit score go up very, very quickly. And then put your home on the market and go out there and start looking for properties. We've got tons of things that you can do as a seller to be able to get out and buy a home without necessarily having to sell your home first, even if you need the equity or the proceeds out of your property. So that could be something that you might want to explore as well. If you're finding that with the low housing inventory that you are walking into multiple offers, even in today's market, we can talk to you about those opportunities as well. We have got tons of programs, and every single person is individualized, and every single person needs something a little bit different. So the best thing that you can do is pick up the phone and call our office, or go to our website and schedule yourself an appointment for a consultation. Let's talk about you. Do you need to sell? Do you want to sell first? Can we figure out a way to do it where you don't have to sell first? Are you a first-time buyer? How do we get you into a home right now and get you out there looking before things go absolutely insane? So I did read to you about the bank rate. Key takeaways: low levels of inventory mean that sellers continue to have the upper hand in the housing market. They also said mortgage rates have come down from their peak, but are still high, and steep home prices are dissuading would-be buyers. So telling you that right now is a good time to start looking before everybody else starts to come out of the woodwork. And if rates were to drop further, that would spur the market for both buyers and sellers. So exactly what I am saying, you guys can find these articles, Google it, start looking into it. The 2008 recession, I want to touch on this. We haven't talked about it in a really long time, and trust me, I lived through it. It was not fun. It was not fun at all. But the 2008 housing recession was very, very different. It was a recession that was brought on by housing. The loan programs that were being offered were basically anybody with a good credit score and a heartbeat could get a loan. Buyers were taking advantage of it. Loan officers were offering it. And I would like to put all of the blame on the loan officers, but you can't give a salesperson a program and say, here's a program for you to sell. And real estate agents, you can't let the loan officers tell the real estate agents, hey, here's a program that we can sell. Go get buyers. Don't give that to a salesperson and think that they're not going to sell it. So ultimately, really, it comes down to the banks. The banks should not have been allowing those types of programs, but that is what got us into that awful, awful recession. Now, this time, we've had the CFPB come out. We've had our Dodd-Frank Act. They came out. They did all of the regulations that needed to take place. And since the time of them doing all of that, just about every single buyer that owns a home today has had to qualify for that home. They have had to show documentation. They have had to come up with some money down out of pocket, or they've had to utilize a down payment assistance program, but they have had to qualify for that loan. So if they qualified for the loan that they have today, there's chances are that they can afford to pay that loan that they have today. The big, huge housing bust and recession is not going to happen until people that own homes can't afford the payment that they have. Well, they can afford the payment. We don't have enough housing. We don't have enough inventory. I truly don't believe that we are going to see, even with a full-blown recession, that we are going to see home prices come down. If you would have looked in 1971, here's a great thing for you guys to take away, and we'll end the show. In 1971, interest rates were about 7.3%. Many home buyers at that time said, we're not going to buy, we're going to wait. We're going to wait for interest rates to come down, home prices to come down. We're going to wait. So if they would have bought a home in 1991, home prices had quadrupled by that time. And that was the first time that we saw interest rates come down below the 7.3% that we saw in 1971. So fact check me, check it out, go look at it for yourself. But I hope that drives the point home. I hope you guys are ready to get on your applications, get started, get your consultation, get ready, get prepared. I am telling you guys, you are hearing me say it. Rates are changing. Economy is cooling. We've had 2 awful reports. We're hoping for another awful report. Actually, we're hoping for a really good report tomorrow with inflation. But I do think that the tides are turning, and I do think that a rate cut from the Fed this year is absolutely going to happen. And I want to see all of you guys have the opportunity to get out there and get what you need. So call my office. I hope you guys enjoyed the show. I'll be back again right here next week, Wednesday at 1 p.m. on YouTube. Pacific Standard Time. We'll see you guys all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom. She's a
Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926.
She's a mortgage mom.
This is Debbie Marcoux, the Mortgage Mom. Well, consumer debt is at an all-time high. Many of you are tapped out on those credit cards, but many of you have a lot of equity in your home. It might be a great time to explore a home equity line of credit or home equity loan. Give me a call at 844-935-3634 or head on over to my website at mortgagemomradio.com.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.